Ladies and gentlemen, if this one thing happens this week, it changes everything for Tesla stock. Tesla stock will go crazy and explode to the upside. Here in this video, I will explain exactly what that is, my expectations for this upcoming week, and Tesla stock, and where Tesla could go in the event that this, does happen. Okay. Now, there's a risk that it doesn't happen, and, every day that risk is growing, that this trade war turns into a real economic disaster. Like, that risk is rising in front of us. Yet, the S&P is up 9 green days in a row. It's almost like someone already knows this good news is coming. Okay? My speculation here. And I think this is, specifically bullish for Tesla, because what I'm referencing is a pause on China tariffs or a full-on trade deal. I don't think a full-on trade deal is coming anytime soon with China, but I do think a pause on China tariffs is coming soon. Look at these quotes from Trump just today. Trump today says he lauds upbeat comments from China in NBC interview. Trump says that he is planning to decrease China tariffs in the future. Again, before you get to a trade deal, you see a pause. Okay, that's what happened with every other country. China paused the U.S. paused the tariffs to be able to negotiate. Okay, like, hey, this is what happens if you don't negotiate, and well, in good faith, we're gonna pause tariffs so we can negotiate. Okay, it's the art of the deal at its finest. Chaos. Okay, cause chaos. That is what Trump has done. I think that phase is over. I think here soon is when we get the pause on tariffs on China, and we start to see relations get back to a better place. Now, before I talk about, what I'm expecting from Tesla this week, if that happens, I do think it will happen any day now, literally any second now. Like, it should have happened already, because every single day you cause more and more damage that is hard to come back from. Okay? Which is obviously a problem. Now, pausing tariffs on China would decrease the odds of a recession. It would increase the odds that the Fed cuts rates this year, because we essentially have no inflation problem. It will create less uncertainty around where earnings are going to look like. And again, the odds of a recession plummeting from where they currently are today, like the 60% range, helps multiples, right? We could start to get back to more of a business as usual and start to look ahead to the positives of having Trump as president. Yes, I know there is some positives there, right? I know there's actually a lot of positives, okay? But financial positives would be deregulation. It would be hopefully lower interest rates, less inflation. We've seen less inflation, but there's this pressure of inflation from tariffs, and that's why the Fed's not cutting rates. The Fed would be cutting rates right now at this meeting, this next upcoming week, if we did not have a trade war going on. And core PCE, month over month, came in at 0.0%. Imagine the kind of environment, how bullish it will be if the trade war dies down and we get like a baseline 10-20% tariff everywhere on everything. Who cares, right? At this point, that would be exceptionally bullish. And I think markets could hit 7,000 this year. If that happens, you could see a face ripper rally into the end of the year with the tax bill coming, deregulation, trade war fixed, clarity on earnings. That could be a very bullish setup, especially for a stock like Tesla. But before I get into my specific expectations this week, up or down for the stock, take a listen to what Tom Lee just said about tariffs and about our markets here recently.
Of you, and maybe Tom, as you're sitting right here, we'll start with, what do you think we know about the economy and the markets as we enter now the next chapter, the next period of time?
Oh, well, the stock market is clearly trying to figure out the path of the economy going forward, because I think it's well socialized that economic data for the next 3 quarters is going to be polluted by not only the tariffs, but some of the bullwhip effects and the distortions that have been introduced.
For the next 3 quarters?
Yes.
9 more months of a lack of clarity?
Yes, because I think at the core, I think the stock market's trying to figure out, is this a dip in noisiness, but we exit 2026 in better shape? If that's the case, then equities would have already made their lows at 48.35 on April 7th, because that was sheer panic and dislocation. But of course, if we don't get trade visibility, and so 2026 looks like we're dragging for another 2 or 3 quarters into 2026, then of course the stock market is going to have problems.
All right, so let's turn to the gentleman at your left to maybe answer that question, Steve. This $1 trillion question about what's going to happen with the economy. And interestingly enough, I was at a dinner last night with a bunch of supply chain executives.
Right.
Great timing. They were much more bearish than I thought. I would have put out. I asked around the table, what are the odds of a U.S. recession this year? And the average response was 75%.
Wow.
Yeah.
Well, can we just dispense with what the president put up there? This is the president's stock market. I mean, let's just be clear about that. I think every trader on every floor today would roll his or her eyes at that comment. And you can see that by looking at the stock market. And I think the key here is the extent to which the market rallied after the president's election. That was his stock market, too. I don't remember if he actually took credit for that. And really, the story is the extent to which the president has squandered that. And we actually have a chart that shows this. If you put up the chart of our outlook on GDP, look at where the market or the forecasters were saying GDP was going to be in the first quarter, 2%. Second quarter, 2%, third quarter, all the way across. And then you look at where it is now. And it's the back half that's the problem. You have this trade problem now. It bounces back next quarter because the front running goes away. And you can see that, folks, in the next chart. You can see my conclusion now is if I look at a piece of data and I can't see how it's infected by the tariff issue, I have to look harder, because almost every piece of data is. Folks, the next chart shows the impact, today's GDP and the contributions to GDP, and you can see how we got to minus 0.3%. They're so good in the back. They're just following me as I ad-lib this along. There is a 4.8% subtraction of net exports from GDP. Now,
5-point drag, yeah.
Some of that showed up in inventories, which was a 3% impact,
2.3,
but not all of it. Why? Because they end up in this trade purgatory called bonded warehouses.
It's as if you were at this dinner last night where we're all talking about bonded warehouses.
Okay. So it's out there. That stuff is out there somewhere. It could go back, but it doesn't. It's not in a place where it has to pay the tariffs yet. And then also the consumption number, which you saw was 1.2%, that was also affected by trade because people brought forward the tariff, the cars. They bought cars ahead of time, trying to get in front of the tariff. So we don't know exactly what's going on. Probably a bounce back next quarter. That is a result of the trade, the front running unwinding. And then maybe by the third quarter, we're into understanding what's really going on.
Kathy, if you were there, you can answer the question now. What do you think the odds of a recession are this year? Do you think they're as high as 75%? We're all trying to answer this question so we can answer the question that Tom laid out about where the market bottom is.
Right.
Well, hi, Kelly. Our forecast is remarkably in line with what Steve just lined out. We're going to get, arithmetically at least, a bounce back in growth in the second quarter in terms of GDP. It's the third quarter and even fourth quarter I worry about. But I think the third quarter is when it kind of comes together and we could see, a decline in GDP. Now, is it actually recessionary? It may not be. That will depend on a lot of factors. Right now, we're kind of borderline in our forecast, whether we have a recession or not. And if we do, it's pretty mild because we still have good fundamentals with household balance sheets and corporate balance sheets. Really, what's going to call the tune is what kind of rollback do we get in the effective tariff rate, which shot up. Right now, it's like 35%. It went from 2.5 to over 30. We need to get that pared back. So those trade deals that they've talked about, they need to come pretty quickly.
I mean, notice how bearish they all sound. I mean, they sound very negative for good reason, right? We know what's going on. Okay. We get it. Okay. But when everyone is kind of this bearish, that tends to be a great time to invest. We know that. Okay. We also know hedge funds and institutions are severely underpositioned in this market. Severely underpositioned. Okay. And when you get the pause on China tariffs, which I'm hopeful that we get this week, you're going to see people rush back into markets. I mean, they're going to rush into markets like something you have not seen in a long time, because then these recession fears go away, at least for the most part, right? The immediate issues go away. And then we can all sit around and speculate that, Q3 is going to be when things really start to get bad. But people have said that for years. Until the labor market breaks, people are going to continue to spend money. If tariffs are not a huge catalyst to cause a bunch of layoffs, people are going to continue to spend money. And that is 73-ish% of GDP. So in terms of Tesla stock this week, I think it could go either way. If we get a pause on China tariffs, Tesla's going in the 300s, okay? 330-ish, around there, around the 100-day moving average, definitely in the cards. If we don't get a pause on China tariffs, and we don't really get any good news this week from a trade perspective, you're kind of hinging on Powell, to come in and save things. Now, we've had 9 green days in a row. Don't be surprised if Monday or Tuesday's red. Now, Jerome Powell could be a bullish catalyst, bearish catalyst. I think it really depends to the lead up. If we rally Monday and Tuesday, Powell's probably going to be a negative catalyst. If we sell off Monday and Tuesday, Powell's probably going to be a positive catalyst, okay? On the negative side, I see the downside is pretty limited here for Tesla. Down to that 50-day moving average at around 263. Could be in the cards if we have a bad week. Although in the last week, we did find a lot of support around that 270 level, right? Bounced right off of this trend line twice in the last trading week alone. So I think 270 also will serve as a good level of support. And we keep, coming back to this 200-day moving average. I mean, 4 out of the last 5 trading days, we have hit or exceeded this 200-day moving average, but failed to close above it. I mean, you're coiling here, and you're, I believe, coiling for an upside move. And again, 9 green days in a row on the S&P. Someone may already know that a pause on China tariffs is coming. Maybe. Let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.